And good morning. This is September 29th, the last day of the month, or one more day of the month. We're getting near the end of the month. Trading the foreign exchange on margin carries a high level of risk and may not be suitable for all investors. The high degree of leverage can work against you as well as for you. Before deciding to invest in the foreign exchange, you should carefully consider your investment objectives, level of experience, and risk appetite. The possibility exists that you could sustain a loss of some or all of your initial investment, and therefore you should not invest money that you cannot afford to lose. You should be aware of all the risks associated with the foreign exchange trading and seek advice from an independent financial advisor if you have any questions. This is a live trading room. It is for educational purposes only. No financial advice or recommendations will be provided. Any trade taken during the live session is not a recommendation or suggestion that you should also do the same. Past performance is not indicative of future results. Do not trade money that you cannot afford to lose. And before trading live, always operate with a written trade plan that identifies the rules for entries, exits, targets, and risk management. And having got that out of the way, let's go to the charts. And we have an alert at 8 o'clock on the US yen at 8 o'clock. We had one earlier this morning on the yen. In fact, I was looking at that one as we speak. We had one at 8 o'clock and one at 7 o'clock. So here's what we've got so far. I'm going to go to my 15-minute chart. Spread this out a little bit so we can see what we're doing. And this was the alert at 7 o'clock, right on this one right here. 7 o'clock, we have another one here at 8 o'clock. I'm going to put this one on the 8 o'clock. I'll make this one yellow. I've been putting the, when we get to the lower time frames, I've been marking where the 15-minute candle closes. So we have an idea what the price action of the 1 minute chart is going to be. This is saying it was an ascending wedge on the US yen, which means basically the one we had before it at 7 o'clock, it was a descending wedge. So this is one I drew. I'm just going to pretty much keep the same one here, I think. We'll see how this thing plays out. When you get them back to back like that and they go in opposite directions, that just basically tells me it's just range bound. And they don't really know, the software is not really being specific about which way it's going to break. But the way I'm looking at this is that here was the alert at 7 o'clock. It was a descending wedge. So I started my A up here, had my B, had a descending AC to where the line was. And you can see this trend is actually still continuing. So what I'm going to do is I'm just going to continue this all the way over here to where the other alert, we just got the other alert. And we have a trend. So basically what we're making, there's a high, here's a low, here's a lower high, higher low, and this C is still a lower high. So we can take it all the way over. I'm just going to bypass this one, get rid of that since that one's not really valid anymore. And right now, the range that we're looking at is I'm going to see a close above this blue line here, or a close above where this D was. It's a higher low. And all it's doing is we're just getting it, it's winding down into this apex of this triangle and seeing which way it's going to break.
Excuse me, Al, just for a moment. Can you let Matt in the room?
Oh, he's not in the room yet? Yes, I can.
Yeah.
No.
No, we don't want that here.
No, I'm here.
Oh, you're there. Okay.
Yeah.
Okay.
I don't need to be up
Oh,
there.
I didn't know that you were in the room. Sorry. I thought because you put in the chat, you weren't in the room.
Oh. No, I'm just late. I was sick last night. Sorry.
Okay.
All right. So here we go. So I'm just going to go and bring this. We have this big wick right here. So there was some price action there, but I'm just going to start my A on this side of that big wick. I don't want to be cutting through the wicks to get over here. That must have been some news announcement or something that happened in somewhere in the middle of the night at the open. Anyway, one thing about this trade is that now we've been drawing as we get these alerts, we've been drawing where we would get in, where we get out, and all that sort of thing. We haven't really been putting enough emphasis on, is it even a tradable trade? And I'm going to start doing that a little bit more today and this week. Uh, to be perfectly honest with this is the last day of the month, or we have one more day of the month. We're at the end of the month, we're at the end of the quarter, and we have a presidential election coming up in another week or so, which definitely has effect on the U.S. Dollar. And I've noticed in the last few weeks, the ranges have been, we get these alerts, we get the breakout, but they don't really materialize. We've been getting an awful lot where they just break out, we get in the trade, and it does nothing, it comes back in, and we either sit in it all day long or we get ourselves stopped out waiting for it to finally break. So I'm not going to be in a real big hurry to be taking trades unless I see a really nice setup and a reason to give me the idea that actually has the momentum to be able to give us our 7 pips. I'm going to be putting a little bit more emphasis on this RCS tool. And like right now, you see on the 15-minute chart, there is no spread at all, hardly at all. Both the US and the yen are kind of fighting for last place. And so there's no real strong momentum to the upside or to the downside. So even if it breaks this blue line and closes above it like we would be normally looking at, I'm still not going to take the trade because we have on this 15-minute chart, we have, as I look and see what the bigger picture is, as I draw this thing out, we have a nice little trend coming up from the bottom. We have a couple little trend coming to the top. This is when I have the trend line with the arrow in the end, that's my third hit. So I've got the anchor, the hit, and the third hit, and then so this identifies the trend. Anchor, hit. I could probably bring this one in. I can change this one to get the arrow in there. There's our third hit. So right now, this is the area that this thing is trading in. And right now you see we got the alert. It's near the upper part of this channel, but it's not giving us a whole lot of reason to take the trade. So we're going to pass. I'm going to pass on this trade. Everybody else can do what they want to do, but you can see where it's sort of spooling in. Here's a nice little smaller wedge right in here where it's still descending, but it still needs to be able to break above the body of this red candle before it's going to be worth even getting up to the upper part of. So I'm going to be looking at the body of this red candle. This is a significant move down. This is where the origin of this down move came from. It's a nice long red candle, came up, retested it, and it's still, so this is really where we're looking at. I want to see it break above that. Even if it breaks, and as this trend line is sloping down, you can see it's getting further and further away from this point, but it still has to get through this point. So if we're looking at, we want to get our 7 pips, even if we can get a break, we need to be able to get into this thing no less than actually below where the trend is, about where the apex of this channel is. If we can get an entry somewhere around here with a good close, but we still have to be able to get through this blue, we have to get through this blue line first. And we have all these sellers up here. So I'm just going to pass on this trade. There's just not that there isn't enough room for me to want to take that trade. Do you have any questions about that?
Yes. Of course, Christine's back. Questions. Anyway, I know that you were saying that it's trending, and I don't know if this makes a difference because it's because it had said that the 8 o'clock wedge was an ascending wedge. So
and normally we would start from the bottom and move it on up.
Right.
Right.
Okay. So I just didn't know if that made a difference because the earlier one was opposing, like you had said.
Not, to me, it doesn't make. I mean, the fact that we had it descending only an hour before we're still basically inside the same wedge that I drew it in the first place. And it really doesn't make a lot of difference. I mean, I can draw this thing, I can reverse this. I can draw this wedge starting up here. It's going to still be the same wedge. Mm-hmm. It'll still be the same wedge. So that's why I didn't bother changing it. So, and whether it's ascending or descending doesn't give me any indication whether or not it's going to break to the upside or downside any more than any other indication would. it's not conclusive as which way it's going to break. Just because it's ascending doesn't mean it's going to break to the bottom, or if it's descending doesn't mean it's going to break to the top. What you're really looking for is seeing where did the move come from, and we're seeing like the whole channel is ascending in a larger sense, and it is making a new high. Here's a low, here's a high, made a higher low. This one made a higher high from this peak. But you see, we had this didn't get up. This one got broken over here. So that's where I mean, I could just as easily have used this channel to here. I could do just as easily have done that. It's still a channel. It's still the same point. The difference is we kind of negated what happened here. And if we take this over here and put it to the top of this red candle, again, you're seeing that it's pretty much is aligning with this area right here.
Right.
It couldn't close above it. We wicked up, couldn't close above it, came back down, and it's going to retest it again. It's going to have, to me, it would have to break this wick, or even, which is basically the same as here.
Sure.
And that's one reason why I took this thing over here, was because that's still a significant point. I mean, I could probably take over a little bit longer over here. But the next target is going to be up here, way over here from the left. This is where the next target is. That's where the next strong candle came from. And that's going to be just on the other side of this, our wedge area, the channel. We'll call it the channel. So anyway, to me, this just doesn't make a lot. It's just not a high probability trade that's going to be worth the risk to get you 2 pips, get your break, get you 2 pips, trying to get up here, have a bounce, maybe even break through there. There's just not that much upward blue sky to even get to this yellow line to make it worth giving up your 2 pips once you get in to take the trade. You'd almost have to get in on a lower time frame. Overall, here on the 1 minute, looking at the you should be looking at the same channel. Yeah, you're looking at the same channel. Let me get these lines off here. You're still looking at the same channel, and if you can get it where you can get a break in with off the 1 minute, across over the 1 minute, but this is still getting pretty tight. This is the wedge right here this is the wedge that we're drawing off of our 15-minute chart. This is the one we're dealing with. These are some of the other targets. If we can break out of this, we may have some room to the downside, but again, unless our RCS tool is telling us that we have significant strength, a nice spread with the dollar and the yen, when it breaks, I'm going to pass on this. Matt, do you have anything to add to this?
No, I'm of the same opinion. I'm here. I'm watching it. I'm just taking a little bit of slow because of all the economic uncertainty and the insanity that could potentially occur in the next week or two. I might only take it at a 5-minute candle close in the direction outside of the wedge, like I did yesterday, and go for 10 pips instead of the stick. So we'll have to wait and see. Right now, it's too immature of a wedge. I don't like the fact that we previously had a wedge alert, and then we have another wedge alert. That means the consolidation is potentially, it's really strong consolidation. So you could get stuck in a pretty dirty move. Yeah. And you don't want to be in this kind of consolidation and take a position that you think is going to go in your favor and it doesn't. I'm just checking RSI just to see. It looks, based on what I could see in RSI, that we could go up, but we're just waiting for something to play out, or we could go look at maybe another currency pair, but we need to potentially wait for another alert, my friend.
Yeah, that's kind of where I'm at with this one. But anyway, this is how we draw it. I mean, we would still, I mean, if our RSIs or if our RCS were giving us what we'd be looking for, and to maybe come down and get a nice little hook somewhere and with some strength to the downside, when it breaks out. If we have some strength on this to the downside, then we may be able to look at a possible potential to be able to get our pips out of it. But you have to just keep in mind also that we're at the upper part of the channel. So I'd be more apt to say, wait for it to, if we can get the strength towards the downside, wait for it to break out the bottom. And then we have a shot at this end of the channel rather than because we're already at the upper part of the channel. We may get the break up to the upper part, reject, and then come back down. So right now, I'm just going to wait and see, let the indicators give us some information as far as what we're looking for. But I want to be taking it with the RCS. If I'm going to take it short, I want these tools to be up in the 89 on something. Right now, it's not even there on anything right now. Or if I take it long, I want to have it bounce off the bottom of this with the the RSIs or the RCS tool giving us the spread that we're looking for. But right now, it's just in the channel, making lower highs and higher lows until eventually it's going to break. And then you have to wait for that confirmation to have it go short or to go long. So anyway, we can keep a look. We'll keep an eye on this one. There's another alert. This was the last other one, what we had, which is at 5 o'clock with the US CAD. We can take a look at that one, see how that one's faring. We'll go to the US CAD and we'll go to, on my 15-minute chart. This was at 1 o'clock or 5 o'clock this morning. And you can see it's a lot of them are still the same picture. We have now this one had I was looking at the trend over here. It did break yesterday or overnight. It did break this higher trend line, but on the same token, it didn't make a higher high. It still made a lower high. So I'm just going to slide this one over, and I'm using this area right here pretty much as the anchor. See that it was a descending wedge, so I'm going to bring it on over here. We have, let's see this, if it's within a couple of pips, I'll accept this as a hit. Let's see, this was at 33.95. To the top of it was 33.94.
You said it was 5 a.m., Al? That went down?
Yeah, 5 a.m. Yeah. Let's see, this was 33.94. And that's 33.94. So it's less than a pip difference between here and where the top of this. So I'll consider that to be a hit. It's a nice move. This area was still rejected. This is still lower. This is still lower. So we have our trend line. I like it at the top here. It's still, so actually we have here's a hit, and there's the anchor. And on the bottom part, let me take this one off here. This was off of there was an alert even before this. That's why that was there. Again, we're getting these alerts back, alerts within an area where it's still trending, so to speak, or it's in our range bound. Here's the demand that I pulled up from yesterday. This is before we even got the alert this morning. And this was this was our demand zone. Here was we had a nice move down, came back out, came back, retested the zone. So this is the retest of this low. And then you see it then just rocketed up to here. So when I get the bottom of this wick, I'll take it to the bottom of the previous low where it was retested. This is my new demand zone. If it comes back down, you'll probably get another bounce off of this level. So I'm going to unlock this and move it over.
Hey, Al, this one still looks like it's in play, huh?
Probably is. Yeah, probably is. And this is all the way from 5 o'clock this morning. Yes, it's still basically inside the wedge, hasn't
Yeah,
broken
it
out of
hasn't
either
broken
side of it.
out.
No. So what we're looking at here, so let me just take this one off. I'm just going to take this off here. So I'm looking at this red candle. This is where the nice move up gave us red candle. That was the origin of this move down. I'll take this over here. And this would have been the high, a lower high, higher low. This C is still lower than here, so I can move that C over as close to where the alert was. And here's our channel. You can see where we did get a break. Now, one thing I've started doing a little bit is that there's always a question of when the alert happens, that's the alert happens, all the candles to the left of the alert is what the software was looking at before it ever generated the alert. So oftentimes what we'll do is we'll take this D and we'll tuck it in as close as we can to where we got the alert, which has been right here. Anchor, here's a hit, that's a valid hit, here's a hit. Then you say, well, what do we do with all the price action inside this first 15-minute candle? And so what I decided to do was to use this, another line, show us where that 15-minute period is when I look at the smaller time frames. This is just to give you a reference of 5 o'clock. There's 5:15. Come over to my 1-minute chart, and we can see what that time frame would look like. So here was the alert. Here's our 1-minute candle that closed just before we got the alert. So this is the low that this alert was referencing. But this is the price action of that 15-minute candle where the alert happened. And you can see where it made a new low. It came back. Now it's still well within it's still kind of trending along in here. So the question is, can we move this from here to here? And what I'm looking at is if I get if it breaks this and it gets a strong bounce off, I'll move it over. Right now, it just shows me that unless you were right here at 5 o'clock, you wouldn't have been able to get into this with any degree of, you probably wouldn't even be able to draw your wedge in time. And this was a 3-pip break. So it did break the wedge. You did get a 3-pip break. It didn't have a very strong pullback. But you can see that at 5 o'clock, it's just been going sideways. It hasn't moved more than 8 pips since 5 o'clock this morning, hardly until, well, I guess it was a little bit more. So again, if you were taking this trade, you have been in this thing for at least, let's say you got in here, you would be looking at, for the last 2 hours plus, you would have seen more than a 6-pip move. And that's what I'm saying is that we're seeing very, very low volume on a lot of these pairs to where you just want to be prepared to sit in these trades for a long time, these next couple weeks. But anyway, so then the question is, do I want to move my D or not? And if I had a stronger bounce, I probably would move the D. This wasn't really much of a bounce. It didn't hardly even test the previous high to that. So I'm just going to let that here. Here's my wedge. It did get a break, but this is basically the channel we're looking at for the wedge. Again, I'm not seeing any strong indicators that tell me that I want to be taking this with the U.S. and CAD being, again, this is they're fighting for last place. Now here they're fighting for on the 5-minute. They're fighting for top dog. And now it's back to the Canadian dollar is showing more strength to the so it would be strength to the downside, with the Canadian dollar being stronger here. Nothing conclusive here, and the dollar is still showing a little bit stronger. So right now there's conflict between the different time frames. I just don't want to take that. I don't want to take that trade.
Yeah, I'm not pulling the trigger either because is not clear. Now, a little bit of an update on USDJPY. We got 5-minute close on the outside of the wedge.
To the downside.
So, but the candle is not in the right direction. That's not a trade. I am not taking that because I want the candle to be in my favor.
Are you talking about break to the downside?
Yeah.
Okay, so what? Explain yourself. What?
Okay.
Explain what you're saying. What you mean about it? It broke, but it's not in the
All
right
right.
direction.
So, if the candle breaks out, so what happened is the candle. So I was looking for a 5-minute candle close. It was really, really specific, but it needs to be at least 2 pips on the outside of the wedge, which it is, but it hasn't. And as we say, hold on a sec. You got your 513. Let me see how long.
I'm gonna measure your 2-pip channel here for you.
Yeah.
By 60.09, so it'll be 58.09. So 58.
Yeah.
09 would be
Somewhere
right about
like
there.
there.
There's your 2-pip channel. Then we were doing this before a little bit, so I'm just going to. So there's your 2-pip channel. He says he wants it to break, but he wants it to go at least 2 pips to the outside the channel.
In my direction, yeah, and it needs to be a candle that closes in my direction. So you see where the bullish candle, the blue one, that's not good because I don't want it close in the wrong direction. Like, it's the wrong candle. If it was a bearish candle, then that would be fine. Now the current candle that we have, that's pretty good. That's looking nice. But I need it to close. I've got another 2 minutes.
Okay, so if we're looking at it to close in 2 minutes, let's mark. Let's show it over here on our.
Yeah.
Let's see. It's going to. Let's see what time is it now? 8:27. So we want to see the close of the when this thing is at 108.30.
Yeah, look at that. It pulled all the way back in there.
So this is the price action. Just to help clarify what we're talking about here.
Yeah.
This is the price action of the 5-minute candle. So there's 30. I'll move this over to 25, 24, because 25 is the candle. So right now, this is the price action of this 5-minute candle right now. It opened up on this, right on this line here. It opened up when it opened up down. This was the open. It went up higher, came down, broke the blue the body of the blue. That means it went lower, and now it's gone higher again. So right now, this is what that 5-minute candle action is looking like right in there.
So
it's
this would
back in the wedge. This is the micro view of what we're talking about.
So what's happening, guys, is what I've when I did my back testing, I realized that what the 5-minute candle close in your direction, 2 pips, then that's going to avoid the vast majority of those head fakes that we keep on getting. So that's the cure to that. You're still going to get them, but they're going to be a lot less frequently.
That's interesting.
Yeah.
Matt?
Yes.
So can you just repeat that again? So that you want the 5-minute candle to be
To close.
2 pips to close, 2 pips below the
For a
wedge.
sell, it needs to close 2 pips below our trend line.
Right.
And it has to be a 5-minute candle close, and it has to be a candle that's moving in the same direction. So basically, if it's blue, that would be the one for buy. If
Right.
it's red, it would be for sell. So if I was
Correct.
at the top of the trend line, I would look for a blue one. If I was at the bottom, I'm looking for a red one. So you see how the blue one came up, closed inside the wedge. Guess what? That would have snaked you out if we would have taken that initial entry.
Yep.
Right.
So actually, basically, if I'm not mistaken, you mean it's just kind of based on the older entry zones we used to use, but with
Uh,
5-minute candles then.
a little bit. It's more just adding a little bit more flavor to it, I guess. Because I was doing a lot of back testing. I was trying to evaluate things and see what we could add to our trading repertoire. And I tried to find a way around the head fakes, or where it comes down, it breaks the
Yeah.
wedge, it comes back in. If we can avoid those, the win rate and the win ratio is going to be much higher. And yes, you're going to miss moves. You're going to miss some moves. Some of the moves are going to move, and they're going to break out, and you're going to probably lose some pips, but it's going to, over time, it's going to give you less losses. And losses are really what people are hurting, because getting the win, okay, great, but if we're avoiding the losses that are pretty evident, like here it came back against us a couple tips, right? It might give us
Well,
it might go all the way up to the top of the wedge.
So basically, we only have that's only 2 pips.
Right.
From the bottom of where we where we could have potentially gotten in on the break and the close. It's only retraced back against us about, let's see if I measure this again.
Oh yeah, that's like 3 pips. What, 3?
We're like less than 3 pips.
Yeah.
Which is still but the thing you have to take into consideration is that it's 3 pips from where the candle closed, but it's going to be another pip and a half for the spread. So right now you're now 4 pips underwater.
Yeah.
Which is still awfully tight for trading. Basically, that's still well within your 7 pip limit, but you have to take that in consideration.
Oh, for sure. For sure.
And it's like we're not really changing anything to what we do, but we are trying to make minor adjustments to the markets.
Be more selective.
Because the markets are fluid. They change based on the economics of the world and everything else. Especially all the pairs that we trade with, these alerts are all U.S. based. The U.S. dollar is still the reserve currency of the world, and all the pairs that we're looking at are all based on what the dollar is doing. And so, as our political situation becomes more stable or less stable, it depends on how the industrial world views their role with the dollar. So, it's going to be changing. It's going to be consolidating. It's going to be trending, and we just have to be able to determine what makes these small adjustments to where it makes sense to make a small adjustment, as opposed to, and this might be a case where maybe we need to, with the fact that everything's been so consolidated and so we've been getting whipsawed a lot here in the last couple of weeks. Maybe we need to start looking at maybe this higher time frame close. But then we have to give a little bit more room. Maybe have to say, okay, if it breaks here, we have to put our stop on the other side of the wedge, which may be a little bit bigger stop. And that's all okay, as long as you can but you're still maintaining the same philosophy of breaking the wedge, getting in the trade, and going for your target. Now, the thing I don't, let's see, this is our trend line. That's our
you don't like that
line.
It didn't break the wick, right?
Well, this is that 2 pip range that we got here. That's all that that's what this. In fact, let me take that arrow off, because that's the one of this to be confused with something else.
Yeah.
Too
close.
Let me go with it. Let's just do that.
It's like 1 pip outside. So
yeah.
But it closed in the right direction.
Now, what if this first candle came down, wicked down to the 2 pips and closed?
I'd need it. I'd want it to come back.
Then you would want it to come back and retest the trend line,
or something around those lines. I need it. I don't want to take that impulsive candle because you don't want to be on the other side of the 50% retracement on that size of a.
Yeah.
Well,
'Cause
that's not that big.
This was a
Right.
strong red candle, but
Yeah.
it came right back, and then this little wick right here retested the top of this.
Yeah.
So there's some, what's happening is that the sellers are coming. You're still getting some the sellers started this strong move down, and also coming down looking to see if there's any more sellers up here at this area. Are there any more unfilled orders up here in order to take it short? Or the other side, and again, you don't know the answer to this, are there buy orders? Are there more buy orders that came down to drive it up higher? So right now, it's still maintaining that 2 pip range. We'll draw another 2 pips on the other side. But you can see the price action in this 5-minute candle. It started out low, it made a lower low, then it closed up higher. Now we're in the next 5-minute range. So we're going to move this over
It's
to
just winding up pretty good.
to 40. Actually, I'll make it to 45. This is the 15-minute. I'll make it for a 15-minute range. So put this right on 45, 8:45. So this is the next 15. This is the next 15 range for the next 15-minute candle. Let me take these off over here so it doesn't confuse us. This is a pretty strong fit. Now, if we get a break here, we could be possibly looking at, now, as I see, the wedge has been decreasing a lot, so which means the break of the wedge is going to be a lot lower now than it was over here. This is still the, here's a high, here's a lower high, here's a lower high. So as you see, the wedge is decreasing lower and lower. If we get, so now we're getting more room to the upside to where our original target was up here. Now it's all the way down. Our break was, here's the original break. Now we can say that this could be the break if we have the strength. We don't have the strength yet.
Hey Al, I've got a question in the chat box from Daniel.
Okay.
Would you take a trade even if the moving average on a 5 and on a 15-minute are not in the right order? Personally, I would say that's not a smart idea.
Personally, I would say that's not a smart idea as well. I mean, right now they are in the, let's see, the moving averages on the, right now they're still in the right order. We have the, well, not quite. The green needs to be on top of the yellow here. So we need to have a green, yellow, purple. We have a green, yellow, orange. So they're in the right order on the 15. They're in the, we have a green, now the white and the yellow aren't in the right order yet either. So if a break, right now the criteria for me would be, it would have to break and close above the blue line. It would have to be all the moving averages, all 3 timeframes would have to be in the proper order. And I'd want to see a 3-point spread on the US yen. So notice if the US is up to a 4 and the yen's at a 1, and I get all the moving averages are in the right order, and I get the break and close above, then I could take a shot at this target. Because right now we just picked up an extra couple pips from where the original alert was. We just picked up a couple pips for the close. There's we got our spread plus. So right now, if it breaks here, you still have to get through this one, but we still have more room to the target of the upper side of the alert of the trend of the zone.
Well, something I've been experiencing personally. I have been taking trades with the EMAs not in the right order, and those trades also always seem to work against you.
Generally speaking,
actually,
you want to have all the wind to your back. You want all the wind to your back, all the wind to your back. And as long as the 1 minute is in the right order, and the others are in the right order, all of the 1 minute is going to keep pulling these others along with it.
Yep. Now you can see them moving. Now they're in the right order.
So now we might look at something here.
Yeah.
Yeah. I'm liking this a lot better. We have a 3-point spread on the 5 minute. We have and this is, again, If we can get the close here, come back and maybe get a little bit of a hook.
It might not, Al, because it's consolidated for so long. The wedge is so narrow that it had no place other to go other than break up.
Yeah, and this could be the head fake before it goes to the other side. If it tests this, I mean, right now I still can't get in this trade yet. I don't want to be taking the trade with everything up here at the high end of the relative strength index. I'd rather see if it hits the 89, comes back and hooks. If it can hook above the 60 zone, then I say we might have a trade. But I'm going to see it hook, come back, and then hook again as it's retesting the bottom of the wedge.
Yeah, because price likes to move in waves. It moves in cycles. So
Now look at what the RCS. Look at our RCS tool over here. Right now we have a nice 5-point spread. All of our moving averages are in the proper order. We're coming back in the retest of the wedge.
Yeah.
Now this could be a trade.
Yeah, if we get a nice bounce off that wedge there, I might like that as a trade. We still got 3 minutes to candle close, which leads me to believe that this pullback is simply just that, a pullback, and then it's going to fill the rest of the candle. But, like I said, I am done trying to predict where it's going. That's only ego. And as a trader, you need to leave your ego at the door. Because it makes a terrible trading partner. Unlike Al. Al makes a really good trading partner.
That is so true.
Some days.
Well, you keep me in check. And you keep me accountable. Which is what everyone needs, more of like an accountability partner. Kind of, hey, make sure that you're on top of your game. People are counting on you. Not only people in the channel, but your family, and because it's a journey, right?
Yeah. Now we have this hook back. You see the green still hasn't crossed over the yellow. We still have everything.
Exactly.
All the moving averages on this 1 minute are still in the right order. It came back into the wedge, but if this thing comes back out and breaks out of the wedge,
Yeah,
it looks like now it's trying to break out the other side.
that's
see
a
our
huge wick on a 5 minute though,
Yeah.
and dollar and the yen are just fighting for the strongest place on a 5 minute.
And this is
Yep.
this is going to be the close of our 15-minute candle right in here. So we're seeing this
So
is
this tells me that because it could potentially just be a pullback, and that the real move might be up, but we'll see what happens here. It's probably coming back down, getting its troops and headed back up, but
now you see that the yen is taking control over all 3 time frames. And this could have been the case where you got in here, come back out, takes everybody's stops, comes back in, and goes for the run.
you're totally
Because,
right. And
again, there's more room to the downside than there is to the upside.
but that's also why I like the 5 minute candle close. Now we got a 5 minute candle close, and it might make it to the other side of the wedge.
Well,
And
right now we're in our two pip zone.
See, this might be good. This is a very strong rejection.
We still don't have our strength to the down to on the. We have no spread on the RCS, and we are now getting to the RSI is on the hook.
Yeah.
On the wrong side. I want to see a hook to go short. I want to see a hook up here like this one. But we couldn't take it there because it broke the wedge. We didn't know if it was going to keep on going and retest. It came back and retested the top of the wedge, but it went further. So right now it's retesting this 2 pip zone on either side. We didn't get the close up here. It's nice strong wick up. Didn't get the close. Here we have a hook. And the yen is still, right now, the yen is strong on this move, but we don't have the spread. Again, we can't take the trade yet.
No.
We have a new alert. Does somebody want to check that out? It's an ascending wedge at 8:45 on NZD US.
Oh,
NZD USD.
That one was moving pretty good earlier
I can
today.
draw it if you want.
Go ahead, Ruben.
Yeah,
Go
go,
for
Ruben. I'm
Give
still
us,
watching.
give us a quick analysis of it as we're watching this one.
Yeah, speak to me, man.
In
We
fact,
got,
while you
USD
guys are watching, I'll draw it on my other monitor here. I'll draw it on my other monitor.
Yeah. So UCAD's at the top of the wedge there. No breakout yet.
NZD, USD, it was
Yeah.
Yes, ascending Ruben.
ascending. And that was at, I'm going to say it was at, what time was it? 8:45?
Yes.
Well, it's more like a channel, actually. The way
Yeah.
I see it.
Yeah, it's a channel. There's
Mm,
no. The only wedge you're going to be able to draw is going to be super narrow because there's no higher high to go off of to make it
yeah.
facing down. You're going to have to either do a flat top, but even at a flat top, you're not getting 2 connection points.
It was ascending, Christine?
Well,
Yes.
Okay.
it also only has a 17 pip range from the D to the A.
Yeah. Let's check this out.
I don't know. About this.
Looks like it's trying to break out of a demand zone to possibly go higher. Let's see what the higher time frame tells us here. Ooh, yeah. This could be a reversal.
Yeah.
Well, on
It gets-
1 hour, it made a W, W, kind of.
Okay.
Yeah.
And like Al said, it could be reversing now at the middle of that W.
Yeah, this could be the final run up, but because it broke its highest high from the last week or so, from the 25th. So now we're in a higher range on the key.
It does have strength to the upside.
Yeah, the CAD rejected where it was at. CAD's moving, well, nice and slow. Let's put it that way. And then USD JPY, we're sitting in that in this within the wedge again. But you see why 5-minute candle close. We're not getting stuck on that pullback. We're not getting stuck in. All right. So
No,
it's
it's
breaking
breaking
at the
down.
bottom. We got 45 seconds. So if we can get a little bit more of a wick on there, that might be good. But I don't think so. I think it's really causing some problems for people this morning.
We did have a bearish 15-minute candle close.
Yeah.
Had a small pullback. Here is your pullback to the wedge. Now the target's going to be down. Be looking at the target down below here. So the question is, can you get you only got 5 pips to your first target. Here's the second target over here.
That. What's the RSI? Okay, we're looking all right. It's going down.
And the yen is
Whole moving averages flipped on every one, but
And we're going to move this thing over to the next 15-minute candle, which is going to be right at 9 o'clock. And we've had a lot of action right around the 9 o'clock, just before the 9 o'clock candle close. So right now we're in is 8:45 to 9. So this is our next 15-minute zone right in here. You'll see the price action. It broke. And right now the bottom of the wedge is holding.
Remember what we said about the bottom of the wedge when it just fizzles out and sits there and kind of consolidates and goes eastbound, that it usually goes in the opposite direction? Because we've been stuck in those trades, right, Al? Where we've been sitting there and it's just...
See, this one is looking more like a drop base to a further drop is what this one's starting to look like to me.
I'm gonna go get the baby for a sec. Give me a sec.
Okay. I like the fact that the bottom of it's broke, the bottom of the wedge has held for the last 5 or 6 candles. Our moving averages are in the right direction there. We had to break and close below the 5-minute 62, but we still have the 15-minute 62 right here at the bottom. And that one hasn't been tested yet. So again, no trade. The fact it closed the 5-minute 62, that's a good sign for a short, but I don't like the fact that it's going to run into this one here first before it gets anywhere. And you're only looking at 61 to 50. You're only looking at 4 pips before it's going to bounce off of this one. If it can bounce and close below this and get all the moving averages in the correct direction, then you have a shot at heading down towards the other side of the of this channel that we're looking at. This was a strong moving, at least we had a little bit of price action on this 15-minute candle area. It opened up down here, came down a little bit, went up real high, but this closed bearish. This 15-minute candle closed bearish. It closed lower than where it opened. I'm going to mark our 62 off. Get that one marked off here. So we have the 15-minute 62. Let me just put it right on this one right here. Well, $15-minute 62 is right here.
Well, Al,
I think it's going to go short. Right now we have, we don't have the spread on either one of these, although it's showing the yen being the stronger of the two. We did get the bounce off the 62. We're now getting the close below this 2 pip range.
yeah.
And it's going to be looking at, it's probably going to come here and tag the 16 to 1562. The
Oh
question
yeah,
is,
moving averages. Moving
Nice.
averages are good.
Now you
Yeah.
have your spread on the RCS.
we have the spread on the RCS on the
What you
1
say?
minute, 2 minute, on the 5 minute we have 4, and we have 2 on this. We could use 1 more on the 15 minute. There's a close below our 2 pip. We got the close below our 2 pip range. We do have weakness, strength to the on the yen. It did come up. It tested the wedge several times, broke up through, and then now we have a lower close. Now we have a high, a low, a lower high, and a lower low. We now
So
have a
I'm gonna
little
wait
bit
for this
have a
5-minute
little
candle to
bit of
cycle
a
and do its
trend.
job.
Going in this direction. There's a little bit of a trend going in that direction.
Matt, can you repeat that, please?
Yeah, no, it's fine. I was saying I'm gonna wait for the 5-minute candle to close. So I'm gonna let that kind of mosey around and do its business. Because if we took it right at the close, we're gonna be in that pullback, and we don't know how high that pullback is gonna be.
Let's see at 55 minutes. Let's see at 8:55. Well, it looks like the 5-minute candle is now. This is a fresh 5-minute candle. That red one. That's a fresh 5-minute candle.
Yes.
So right here is at 9 o'clock. So that'll be the next. That'll be the close of the 5-minute candle at 9 o'clock.
Yeah, that's why I went back, Al, and I said, hey, I need to find a way to get out of these, to avoid the mental pain it is to sit in a trade that comes back against you hard like that. And this is what I drew up is 5-minute candle close outside of the wedge.
And that was the lower close. There's the third hit. There's the third hit of this little trend right here.
So remember, third hits on the trend line, those things are as valid as anything. So I actually like taking nice clean tags on that. Are you adjusting your wedge because it kind of?
No, I haven't adjusted the wedge at all.
Yeah.
This is a 2 pip range below the original wedge. The orange one's the original wedge.
Yeah.
This is where we had the break, where we said we had the head fake.
Yeah.
I can take it on up to this way.
I think all 3 of these pairs are going to all break at the same time.
Could very well be.
UCAD sitting at the top of the wedge. UJ is just kind of forcing its way. You see how on your 1-minute RSI it peaked at the bottom and then hooked back real hard, and now we're outside of your kind of power zone area in the middle, and then we're about to close that candle. So if that candle closes, as that 5-minute candle closes outside there, let's see what we got. Nope. No dice for that one. At least not at the present moment. Whole moving averages on all 3 time frames just flipped, which means
To green.
let's take a look at our moving averages. What do we got here? 1 minute 62 is at the bottom of the of price, so that's a good sign for a buy. 5 minutes at the bottom, but it looks like not all in the perfect order, right?
Not in the perfect order. That's correct. Well, right now the moving averages are in the right order for a long.
Yeah.
We have green, yellow, purple. We have green, yellow, orange, and we have green, yellow, white.
Okay.
And we have strength on the dollar. We have 3-point spread on the 5. We have well, the dollar is still stronger on all 3. We only have the 3-point on the 5 minute.
Yeah, and you only got a 1. Let's see.
We're at 9 o'clock. We're at 9:01 right now.
Oh yes, 9 o'clock hour. Let's go. You know what? I might take that. Because this is going to be an impulsive move out of here, so I'm going to try something. Or I'll just stick to my rules. How about that? I don't want
There you
to
go.
deviate. I don't want to deviate. I want to do the same thing over and over and over again. So
You want
I'll
the
let
5 minute,
this
and
run.
you're still waiting for the 5 minute candle close. So you're looking right now. You're looking for the next 5 minute candle to close, which is going to be at 9:05.
Yeah, I'll wait on it because there's been too much. There's been too much stuff going on. There's too much consolidation. There's too much indecision. You see how big those wicks are on the 15-minute? That means it has no idea where price is going, and you don't want to be playing around in that sandbox. Now, US CAD, on the other hand, broke the wedge permanently to the upside. Let me see what it looks like on the 5 minute. 5 minute, we're about to get a 5 minute close at the same time for a long. So that would be interesting. So, and the reason is because US dollar is strong against both the Japanese yen and the USD CAD.
Right now we have the dollar strong on all 3 of these. The 6 to 5, and when you get this, the dollar that's 6 or 7, that means it's going to be the stronger of all the pairs. So you're going to be trading it in the direction of the dollar strength.
Yeah. Yeah, I am definitely on that side of the fence for sure. You don't want to be in one trade where the US dollar is the second pair of the currency and the other one is the first one, and you're in the same direction. So you're both buys. You're going to lose one of those trades. So we got 1 more minute on the UJ, and that candle turned red. So that was another big rejection, big stinking rejection. Check that out. But you still got 45 seconds, so it could pop up and turn blue, but we'll see. You see how it's hitting the 13 moving average? There's a lot of battle going on there. I don't like how big those wicks are.
They're huge.
There's a lot of.
Let's
When
just
I
look at
mean,
the 5
what I
minute
mean
chart
by
here.
wicks is the wicks are like bigger than the candle bodies from preceding. So there's so much indecision here that you can't use a tight stop loss. You're gonna get wicked out. When you have a lot of wicks coming out of both sides, you want candles that are ideal, and ideal candles are kind of, you're gonna want maybe one long wick somewhere, but you're not gonna want like every second candle to have a wick that's longer than the body of the candle. You're just looking to get your butt handed to you. All right, USD CAD is actually looking good, and that was a 5 minute candle close. So I'm going to try that one, and that will be a long, and I'm going to put a 10 pip target just to see. It's one thing to do back testing, and go back and check stuff. It's another thing to put your money where your mouth is. So I'm going to try something. This is not financial advice and not any type of recommendation either, guys. So I'm putting a 10 pips take profit, just very arbitrary.
So you look at the US CAD is what you're looking at?
Yeah.
What was the alert on that one?
That was a descending wedge at 5 o'clock this morning.
You sent it at 5, okay.
Yeah, remember that's the one we did earlier, and we're like, yeah, it's still in play. So let's see. Let's put it on our list and watch it go.
So making lower highs, lower highs, lower highs.
It has less wicks on USD CAD right now. So I'm in about 4 pips of drawdown after spread. So we'll see.
Let's see, we're just about to get the cross of the yellow across the 62. So this one hasn't quite reached the the direction of yellow, of green, yellow, orange. Hasn't quite reached that yet on the 15. We have it all in directions on the 5 and the 1. We
Right.
still have this little bit right here we got to get through. Let's see how our yen trade is doing
Oh, yeah,
here.
you put your wedge a little bit different than mine. Mine was a little bit more narrow, so if I adjust my wedge a little bit.
Well, I'm just using the higher trend line is what I did. This wasn't really the
okay.
wedge draw. This is just the higher trend line that I'm
Oh, I
following.
got you.
Here's the original wedge way back here at 5 o'clock. And you can see it made a new high, but it made right now it's still made, if I were to move this over here after the alert, it's still a lower high. If I come over here, it's still a lower high, still a higher low. And right here, it's still there's a low. Now it's a lower low here.
Yeah, and we're back into the wedge. So
We're back into the wedge.
maybe it's not good. We'll see. Let's see what's Kiwi doing. Kiwi looks to be bouncing off the bottom, but like I said, it's more of a channel than an actual wedge.
And so this thing has several breaks to the upside, several breaks to the downside. So right now, I'm not even considering this wedge to be all that valid, to be honest with you.
No, you can't have this many breaches of the wedge and it be valid. It's just not, because you're invalidating trend lines after 1 or 2 breaches. This is a mess. Just being honest.
I'm gonna take this off. Like I said, I'm still liking the higher and lower, basically it's basing right in the middle of the channel that we're looking at here.
Yeah.
Between our purple lines, it's still basing right in the middle of it all.
Yeah, we got a bounce on the 5-minute 62, and it looks like all the moving averages are in the right direction. Yeah. on the 5.
On the yen.
Yeah.
Let's see. Green, yellow, purple, green, yellow, white, green, yellow, orange. Yep. Everything's still in the direction to be going long, but still we have all these wicks that it just can't seem to get through.
No, it's been a real pain in the arse this morning.
Let me put the 5-minute 62 on here. We'll see where that is.
You're traveling tomorrow, right? Is that
I'll be after the session. We're gonna hit the road tomorrow.
okay?
I'll be here in the morning. I'll be here for the session in the morning.
Okay.
Move the sentry zone out of the way because that's not valid anymore.
Nope.
I say we still have this strong wick here. We have this wick. So really, right now, if you're looking at from a pivot high, pivot low with very little body in between, this is all whipsawing. This is really where our triangle is, from here to here to here to here. Let's see if it's, yeah, pretty much to there. That's pretty much the area that we're looking at. Make this one yellow.
Still so many wicks, right?
Yeah, it just doesn't have any real direction. And this is what we've been fighting for the last week or two, is that we get these breakouts and then we take them and then we find out we may get to be barely break even with the spread, maybe make a couple pips, waiting for that 5 or 7 pip target, can't get the target, then we get stopped out on the other end.
And it screws up your head.
Yeah.
It screws up your head for the next couple trades, and you're just like even yesterday. Yes, I was positive overall, but my first trade was a loser, and it played on my head because in my head I'm like, well, now I need to make double the profit to end up in the green for the day, and it really plays with your psyche. And we want to try to avoid that as much as we can. And if we can do it on a 5-minute candle close instead of sitting around messing around and getting bit with head fakes and stuff, then maybe it's worth it to lose a couple pips. Keep your head clean.
What's really happening here is at the top of the channel, and it's basing at the top of the channel is making just going sideways. If we look at our 15-minute, if we start looking to where some of our check out where some of our fib lines are with this. So it's fighting this green fib line, and then the next one's going to be up here. So if it does break the upside, we could be looking at a higher time frame. Let me go to the 5-minute chart. This is more middle of the road. With the yen, I like using the 5-minute fib lines because of the variation between the value of the yen, that the 5 minutes seem to work more like the two period on the 1 minute. So I like the 5-minute fib lines, and right now we're right at a 5-minute fib line right here, and here's the. Let's see. So basically, if we look at this to the demands, this is really kind of like the overshoot area of the up move. We had this up move coming in from down below here.
So for USD CAD, I've got two targets. Okay, I've got the stick target that we talked about yesterday, and then I have a static 10 pip target. So obviously the 10 pip is higher likely that it's going to go that far, but the stick is going to give you twice the profit. So the stick will give you a target of 3403. But remember, 3400, there's going to be some mess there because that's kind of more like an institutional level. And so there's a lot of stuff going to be messing around there. So your 10 pip target is going to be your more conservative target for this. But it has been on an uptrend, USD CAD. It's been on an uptrend for a little bit at this point. At least the last 2 weeks, it's been on an uptrend overall. RSIs on UCAD are way up in the high zone. So it'll be interesting to see how high we can take her.
Still nothing real conclusive.
Yeah, not so much right now. Nothing that overall makes me super happy. So, but even then,
And we're about 10 minutes from the market open. Why don't we go ahead and take this time to take a break, get a cup of coffee, and let's come back in about 10 minutes.
Sounds good.
let's do it.
And here we go. Back to the charts. We didn't miss anything in the last several minutes.
Yeah,
And
nothing.
on it goes.
Other than the US CAD giving me some smoke there.
And like I said, it's just been so range bound these last few days anyway, maybe even just a few weeks, that we're getting these, we get the breaks, we just don't get the follow through. And we need to follow through in order to get the breaks. So when we get the breaks, so that's just the market as it is, and we just have to be able to adjust to it. And adjust means either don't take the trades or find some other ways of entering that may give us a little bit higher probability again. And when they break, they still break, but it's just a matter of when. And we don't always know the answer to that one.
Yeah.
And so I think this next month could be very range bound with the elections coming up and everything else. Looks like the yen is starting to break down. And we'll see if it can come down to, see if we get a close, 5-minute close below the, see if we can get a close below this 1562 is the question here. And I'd be looking for a target down around here, this area, around the 105.43 area. This is all happening just as the market's opening.
So did you take the UJ trade, or you just sitting down for now?
I'm just charting it out right now.
The 5-minute wick past the red fib.
You're getting a little bit of a bounce right off here off this blue Fibonacci on the one. Let's see, that should be, actually I kind of like it on the 5-minute better actually because of the pricing of the yen.
Yeah, so officially my USD CAD pretty much failed. So I took the stop out just because of the there's too much going on here. So we'll take the loss and move on.
Right now, all of our 1 minute on this US yen, all of the 1 minute are on the in the right order. And we've got the nice break below the 62, the 5-minute 62, a nice break there. We did get a break of the 15-minute 62, but it hasn't closed below it yet. We do have a crossing. Oh, so we need, yeah, we do have a green crossing the yellow on the 15, so that's almost in the right direction. It's got to get the orange one up above. It's got a little ways to go before that's going to happen. That was a nice strong move down, a nice strong break below the sea level here. We have the A, which came right down to where the A was. Here's a retest. It got wicked above the green, couldn't break above the yellow. So I'm still looking, ultimately, I'm looking at this zone down here, where I got these blue zones are. That might be a little bit optimistic, but that's kind of what I'm looking at. Red holes, red holes, red holes. Everything's pointing down. Came up, retested the 1562, could not close above it. Now it's closing. See if we can get a close below this level here. It should be, if we can get a close below this blue candle, we should be trending on downward then. If not, something's wrong.
Yeah, it's just been an odd couple days. That's all.
I do like this nice candle on the open. Right now, the bottom of the wedge should hold. And see how's our RCS doing. We have a nice spread on the yen on the 5 minute, nice spread on the 1 minute, and we're getting a 3-point spread on the 15. This is going to be the 10 o'clock. Let's make it 9:45. So this will be the open of the next 15-minute candle. Here is the 9:30 candle right here. This is our action in between. And if we can keep the yen to the strong side on this pullback, if it comes up and tags the wedge with a hook, we could probably take it short to get another entry, if take it short in this area. There's the hook. And I'd be willing to take a sell stop below this blue candle right here. Oops, gotta change my broker here. There we go. Got to close below that blue candle. And let's try and get a sell stop around 15.58. There's a bid. So far as respecting the bottom of the wedge. And it's respecting the 562. And I'll put some protection in. We got take profit, stop loss. And our profit is looking right down. Here's our 7-pip profit. If it works.
We got any news today, Al? Did you have a chance to?
That's a good
move over
question.
that, or?
It's a good question. Let's see, news.
I know sometimes we get so busy we overlook that.
Yeah.
Nothing, eh?
Tuesday, nothing to speak of all day long. It seems pretty quiet till
FOMC.
tomorrow. A little bit more tomorrow, but nothing today.
Euro, yeah. Even the price action is not making sense, right? At least on
No,
my.
it's just you can just tell that there's just a lot of indecisiveness in the markets right now. Everything seems to be relatively range bound.
Yeah. And lots of eastbound traffic.
Even like this move at the open is a nice strong move at the open. We've got a little bit of a flag pattern going on right here.
Yeah.
And so you have a little bit of a trend. It's still kind of respecting. It broke and closed below. Had a hard time breaking above the 1562. Right now it's sort of sandwiched in between these two. I don't want to see a close above this area right in here. Should respect this strong candle coming down at the open. If not, something's wrong. Right now, I'm just going to keep my stop in the middle of this zone right up in here. Let's give 9 pip stop. That should be, if it gets up near that, something's wrong. At least it'll keep me from getting wicked out with my stop. If it just comes up here and tags the bottom of this, it keeps me a little bit out of harm's way, so the spread doesn't take me out. Have a nice little spread between the 62, the 62 on the 1 minute, and then the green and yellow area. Oh, it's closing again. And the longer it can base in between where the wedge is and this area, as long as it can base, the longer it can base in here, the stronger the move to the downside should be. Move this thing over to the next 15-minute candle, which is going to be at 10 o'clock, I believe. 9:45, yep, 10 o'clock. So this is the next area. We'll see how this thing plays out in this next 15-minute candle. And this was the open of it. So all we're doing is we're just looking at the price action between the 9:45 open of the candle there to the close at 10 o'clock. We're just looking to see how on 1 minute bars, we're looking at the price action over this so-called 15-minute candle inside this region right in here. That's where it was green, and over down below is where it's going to be red. Making new lows. Any questions while we're watching this paint dry? Anybody still there?
Hello.
There we go.
I'm
There's
here.
there. I knew somebody had to be there. I knew somebody had to be there.
I'm watching the New Zealand.
I'm here.
There's not a whole lot to talk about right now. We're watching to see if this thing's going to break down and it's going to hit a target.
Sounded like a cat. We got cat, fish, babies.
That was my cat.
Uh,
He's very vocal.
yeah, I've got a baby. He's pretty vocal too.
Yeah, and sometimes they even sound the same. Cats, babies.
Hey Al, I just noticed that the 30 minutes 62, the position of it is might be a little bit relevant because in the US CAD it's flat. Like
30 minutes 62. I guess we could put that on. Let's see, do I have that on here? I think I have that ability here. 30 minutes, maybe an average.
yeah, you can switch it.
And so this one, the low came in first half of this 15-minute period. The low came in first, and now the script is making the new. Now it's taken off to the high side. Can you see where it had the break and just took it? Was up a couple pips, and that was about all we got out of that one. Right now, we're still probably only maybe 5 pips, or just about break even. Here was the break. Here was the retest. From the retest of the wedge, if you got in up here, the retest. Came up, retest the wedge, strong move up. Barely closed on this 1 minute candle, but the 15-minute candle is more than likely not going to close above the wedge. We'll see how that goes here. Right now, this is looking pretty much like a neutral candle. We got the open, the low, the high and the low section of this candle looks about even right now. A strong move up to see if they had any more buddies up here to take along the ride down to the short.
Leslie says that my cat caught her cat's attention. That's funny.
And we'll see if this 15-minute bar can close bearish or if it closes bullish. If it closes in this red zone, it closes bearish. Here's our 62 on the, here's our 30 minutes 62, which could be get a bounce off of that. That's this blue line right here.
More than likely, that's what's going to happen now. It's really the 30 minutes 62 is the middle of the road, but we'll see what happens.
Okay, we now have it's 10 o'clock. We have a new candle starting. This was a close. So this was the low of this 15-minute candle. Let's see if the high holds. Here was the open. I'll move this over so we can see where the high was. Here's the open. Here's the high. Oftentimes on a descending trend, you'll see the candle will close, the high will come in first, and then it will go lower. Go for a 7 pip, take profit on this, see where it goes. We're not getting those moves where you get this really strong move down or a strong move up, get your 7 pips and you're in and out in there 20, 30 minutes. We just haven't been getting those lately. I don't think it speaks to the methodology, it just speaks to the way the market's moving these days. All of our moving averages are still good. We have a nice spread on the yen for the 4-point spread, 3.2 on the 5-minute, 3 on the 1-minute. All of our RSIs are down below the 40-60 range, heading towards the 11%. Came down, had a hook, came back up, hooked again, still staying out of the 40-60 range. That's still good for the short. Still looking for it to break through this section here where the A was. On the original, this was on the original wedge. Had this as initial target, which is right where the 30-minute 62 is. Comes right down there and gets pushed right back up again. Right now, all the moving averages are in the right direction. We almost have the cross of the 5 and 62 on the 15-minute chart. This is still kind of holding up the process, I think, to the short side. With the 5-minute, everything's looking good. We have the price-wise, on price action-wise, it still looks good. Just made a lower low than the previous candle on the 15. Hasn't come up to where the high was. You see it came down to that wick and it just couldn't close below that. This would actually be a close below this line. If you get to close below this line,
Yeah, even if you took this on a 15-minute candle close or any of these other trades, I don't think it would have made a difference because it's just consolidating.
but it basically has all day to play out here, and it could be very well. It could keep going back and forth and have lots of wicks, and this was a fairly strong candle coming down like this. So I'm going to take this off, unsync that. Put that 30-minute on here. And we have about 5 more minutes. Does anybody have any questions, comments? Raise your hand or we can turn your mic on. Right now, this has been pretty much of a neutral candle here. It opened up here, went up a little bit higher. It couldn't break the high of the previous candle. And so right now it's got a little bit of a gap right in there, which is kind of interesting. Coming down and retesting. See if it can break below this 30-minute 62. Let's see if we can get the target. Right now, I feel like I could probably move my stop. If this thing doesn't break, we can move our stop down here. Maybe just put it about halfway in between this zone here. That brings us down to a 3-pip stop. Worst case scenario, you lose 3 pips on this. Best case scenario, you hit your target.
Daniel had mentioned all good. Took 2 minor hits today. Sometimes the best trade is no trade.
That's exactly right. We were a little slow getting into the trades today. It was, and we're probably going to be slow getting into some of these trades for at least possibly for the next month or so. But we're just giving you some other, trying to give you some other pictures to look at, another way of looking at the same picture. Giving you an idea of, as we see these markets changing, we need to make some adjustments to it. Matt decided to make the adjustment to go to a close of the 5-minute candle 2 pips below the wedge. I think it's I certainly think it's a valid approach to it. The higher the time frame, probably the more stop you generally tend to use. But I don't think it's too out of the ordinary to just put your stop at the other side of the wedge and try and get out before it hits that, if it does get to that point. But give it to where you give it enough wiggle room to be able to breathe and to be able to get a few pips out of these things. So basically, you want to look at the price action and just see how it works. Here's our 10:15. No, it's not quite 10:15 yet.
No, 2 minutes still, my friend.
Yeah.
And we're going to be good.
Let's move this over to 10:15. This would be the open where this is the last minute on this 15-minute candle. But you can see, like when we had this first one, came down and made a new low, just like this over here. $13, $14, $15. So this will be the open of the new candle right on this. You see how this candle, this was the 10 o'clock candle. This was the open of the 10 o'clock candle. Came down, opened up, closed down, made a new high, but never did break the high of the previous candle. Where it opened, went up higher, came down lower. But this area right in here, from this wick on down, it hasn't reached the top of that other green zone. Here was the high of this. Here's the open of the candle, came all the way down. This was actually the open of it. There was no wick at all, hardly at all. But this is basically what we had here. And now we have a new candle.
Well, that looks like it's it for the day.
I would say so. Looks like so. Anyway, Not a whole lot of activity, a lot of range-bound trading, not a lot of alerts. I think we need to get used to it for the next week or so, maybe even more than that. Anyway, thank you everybody for coming in. If you have any questions, last chance for questions. Going once,
Going twice.
and we'll see everybody tomorrow at 8 o'clock, same time, same place. See
See you
then.
tomorrow.
Bye, everyone.
Bye, guys.